So, welcome to the last word in sustainability. What can I say? What an event it's been, what a year it's been. With me to discuss everything that we've found out over the last week and to discuss the bigger trends in geopolitics, sustainability, supply chains is Daniel Schmand, who is the Global Head of Trade Finance and Lending at Deutsche Bank. Daniel, welcome. Thank you very much for your time. And I guess my first big question is, where do we go from here? What seem to be the priorities that are coming out of the last 20 months or so from a trade and trade finance perspective?
Look, I think we had interesting 20 months. We've learned a lot. I think we will transform and even transform in a rapid speed also from a trade finance perspective. So we've learned how to support COVID schemes. We've gone through the aftermath of Greensill and the theme of fintechs and banks. We've seen now a commodity rally. At the same time, we had the Hin Leong case. So commodity financing is a super topic. And also there we had a bit of an issue. And then we come obviously to the topic of sustainability. And if I just want to be super practical, if you think that through, not how relevant is it, do we need to do it now? I think we've over that. What you really need then to support the transition is project finance, expertise, and DNA. So from financing traditional flow and goods, if we want to take sustainability serious, we as a trade finance organization, we as trade finance bankers need to be better and deeper engaged into project finance, infrastructure, whatever type of projects you can think of, because that will be, from my perspective, the biggest theme for the next decade, and that's where we need to up the game.
So that's really interesting, because I think from an outsider's perspective, obviously you wouldn't think that it is quite so detailed, but sustainability is raising all of those issues, isn't it? About really getting into the weeds of what makes a project sustainable, how you can actually build financial structures around all of that. How do you reward sustainability? How do you make sure that actually the bank themselves becomes a degree of a sustainability expert? Because we're none of us sustainability experts, right?
No, look, we were historically experts, if you talk really about the crowd of the trade finance gurus on emerging markets, how to finance something and let's get the money back. So that's where we were really good at it. Then the next shift came hey, what about non-financial risk? What is about all of the money laundering, terrorist financing? And we got better at that and became experts in that field. Now, the challenge is to do exactly the same from an ESG perspective. Look at the project, avoid any shape and form of greenwashing, making sure we have the right tracking. We have the processes and procedures in place. So literally, that's then the third iteration of a very long learning from a trade finance expert perspective.
It's so, I mean, there's so much there, so many different things to unpack. But if we just looked at one of those things, which is the regulations are actually pushing a lot of this, aren't they? And if we look back at what's happened at COP over the last 2 weeks and look at the types of things that are coming through, there are huge trade finance consequences as a result of what's been decided, for example, on methane and, soft commodity agricultural supply chains, what's been decided on fossil fuels and emissions and things like that. It's going to have big consequences, isn't it, for the trade finance sector, because the UK government announced, for example, that they were going to move out of funding for fossil fuels. Well, how does that happen? It has to happen as a project basis, and there has to be a transition. Do you think?
There needs to be a transition, and what you just described is so spot on. So you can make, and then that those are political statements, and for the right reason. We're going to move out of fossil fuel. and what then? So the question is, what do you mean by that? You need to build then an alternative infrastructure, alternative means, to basically be able to move out. Otherwise, it is a nice and fine political statement. And we had also commitments on global warming where everybody agreed that was nice and ambitious statements, but we could not hold them, because what was missing is fundamental investments into infrastructure to support that, and to basically go from fossil to renewables. But that requires infrastructure, that requires facilities, this requires a completely new market infrastructure. So how do you trade green hydrogen? There is no market price for it. There is an artificial market price based on the cost of a CO2 certificate. But those challenges is really, from a trade finance perspective, okay, we got it. We got where you want to go, but how do we get there? And that is a massive investment. And let's be, at least I'm excited. That's a massive opportunity, because what are we good at? We finance stuff around the world.
Exactly, but banks are critical to this whole process. Trade finance is critical to this whole process, isn't it? If you look, I mean, we've done some analysis, and at the moment, only $1 in every 5 in trade is actually against sustainable projects. There's got to be, if you look at the figures, it's about $12.8 trillion in trade finance that is not sustainable at the moment. So if we take that amount and say we're going to shift all of that, the governments can't hit their targets without banks, can they?
You're spot on. So the question is where are those sustainable projects to be financed? I would argue there is not one bank out there who would not love to basically go from $1 to $2 to $3. However, then there needs to be also the need of financing for those stuff. So you could make, again, that would be a political statement. It's now 5 out of 5. And then, so what? What does that mean? Where are the projects? What are you going to finance? Because if then the 5 becomes as narrow from a portfolio as 1, you've not really done it. So I think what we really need is find those projects, find those opportunities to invest them. My argument is we're not short of liquidity and finance capabilities and capacities. We are short of some fundamental regulations, because how do you be sure, if you set up a hydrogen plant which has a 15, 20, 30 year cycle, that you basically have the right offtake agreements? There is no offtake market. So how do you transport hydrogen? So it's a lot of questions. So I think it needs to be all coming together. I don't want to be too sound negative or pessimistic. It will come together. And I believe over the next 12 to 18 months, we will see a massive acceleration, because if you just listen carefully, what is talked around the COP is stop talking, start doing. That is, for me, the main takeaway is like, particularly society is sick of hearing smart, ambitious, well-sounding statements. So, or somebody does another nice statistics on the problem. I think everybody got it. So the question now is, what are we going to do about it?
It's absolutely, what are we going to do about it? What are we going to do about it? So what regulations, I mean, you and I love talking about politics, and we love talking about geopolitics. What regulations need to be there? And can we actually rely on the world's policymakers to make the right decisions and implement the right regulations? Do you feel as though there's something that the policymakers need to do? Do they need to talk to the businesses and the banks, or do the businesses and the banks just need to get on with it and wait for policy to catch up?
I would say we're at a crossroad, because if we now talk very generically about policymakers, let's talk first about politics and politicians. the moment their likelihood to be re-elected is 90% dependent on what they're going to do to drive the ESG agenda, policies will come. So I think the real pressure will come from the next generation of voters, so the younger ones, a little bit younger than myself, who are super clear what they want to go to a much more sustainable. So it's also on the two of us. How do we buy? What type of clothes do we buy? You can still, most fabrics are based on oil. You can get also fabrics based on sugar. So also the question, I think, is the society will drive policymakers, and policymakers then will drive also the behavior. But that's an ecosystem which needs to go hand in hand. And as I said earlier, I feel the pressure is going up on policymakers to stop talking about it. We want to see action.
I couldn't agree more, and I think where we're beginning to see a big shift is in this desire actually to move from the greenwash statements, which you talked about just now. I mean, greenwashing is a real risk. You know, you can introduce a green guarantee scheme, or you can introduce, you know, green pricing for something, but surely we need to do more than that. We actually need to change our actions straight away. It's not just about having something that's just about green. It's about including sustainability in every single sense of the word, which actually interestingly also includes governance. I mean, you know, it's not just a governance and social responsibility as well.
Absolutely. And look, the thing is quite interesting, but also complex at the time, because imagine just for argument's sake, is you want to get the carbon footprint massively reduced, and you put just example given huge pressure on Germany. Do you really believe society and politicians are ready to reopen nuclear power plants? So because it comes also with consequences, it comes also with things you don't like and want to hear. And I think we are still a bit of a way of where we get super honest. Also, what are the consequences? What are the consequences on pricing? What are the consequences on nearshoring versus shipping goods around the world? So I think we will see a complete different shift of the ecosystem. And I would argue the current stress in the supply chain and the push on ESG come actually, if you wish, perfectly together at the same time, where people, companies are much more open to saying is, yeah, maybe it's not worth to ship it around the world, find the cheapest labor force, and then basically being cut off. So I think the two get very handy, and if we drive that narrative, and again comes back, we need then to finance the transition. And I would argue we are ready, and we are seeing more and more support also from a political, but also from an industrial base.
And I think that's what's interesting. I mean, you made the point yourself. At the moment, the debate is pushing at an open door. Everybody is keen to do this. And when we held our event last year, everybody said, this is the next big thing. This is what we're needing to focus on, because, you know, regulations will follow. The political will follow, but the general consumer appetite is already there. And the willingness, as you said, every single bank would want to be involved with these types of projects. It's not that the banking sector is holding back on these types of things. The banking sector can actually move into this new era, actually, which is coming through. It's a huge structural change in the global economy, so everything has to change, and that's exciting. To what extent, though, has COVID and supply chain shortages and the geopolitics of trade over the last few years actually created this perfect storm, this perfect moment where we're all ready for this revolution?
I think what you said is more a statement than a question, because you're really saying is we now have the perfect storm, or I would say the most fertile ground to move it ahead. The only thing, and I would caution all of us, we should not leave people behind. So we need to be at the same time driving ruthlessly the agenda. And I would argue developed markets need to set standards and need to support the rest. But you can't literally tell somebody who sits on oil, please don't use your oil anymore. There, the question needs then to be is, if you use your oil, how can we make it as clean and as sustainable as possible? So I'm a big fan and believer in driving the agenda, but at the same time, I'm also very mindful of exclusion and making sure we're taking also everybody along the journey and that nobody feels left behind and cut off.
Do you know what? I think that's a point really well made, and this is what the social part of ESG is all about. We've dealt with, to a large extent, a lot of the governance issues through digitization and fraud detection and AML and KYC. The environmental stuff is a big legislative program that's going to involve a huge structural change in the economy. But I think this social element is very important. And I mean, I'll just give you an example. When we were putting together research for the whole program for this event, we were talking to an organization that was saying, well, they were working with some palm oil mills in a very rural part of Indonesia, and they'd actually had to say, well, that's not sustainable anymore. We've got 1,500 companies. That's not sustainable anymore. So we'll have to narrow down those operations and move to something that's closer to home and reshore to some extent. But what they're doing in that process is exactly what you're talking about, which is they are excluding the companies, those 1,500 companies that are probably each of them creating between 50 and 100 livelihoods. And they're not helping them to transition. They're shutting something down in the interest of sustainability. And that in and for itself is a difficult nut to crack. We have to work out how we're going to go through all of this. And it's a huge responsibility on the shoulders, not just of banks, but of businesses as well.
So look, that's exactly where I think we need to have an open and honest debate. And you're using the example of palm oil. So we have the RSPO. So there is a certificate of sustainable palm oil. Now the question is, how do you bring these farmers along and help them? And I would also argue technology will help. So today, with drones and you can control, you can surveil, so you can be sure that people then also follow the process. So I think we need to offer those the opportunity to join. We need then also to be super clear and fair. If you produce in a more, and I deliberately use more sustainable, and then every time a little bit more sustainable way, you're not going to be excluded, but you need to have the dialogue. You need to basically then also provide them the means of financing to go that transition. But just excluding them is absolutely the wrong way to go. We need to show. The same is true with the cobalt mine. So how you're going to deal with that as topic? And then on the other hand, you can't have electrical cars without cobalt. So we need to basically get those things locked up and then make sure the entire supply chain is sustainable. And I think what we've not yet discussed is, and I find that a big opportunity. So we always talk supply chain, producing, selling. Most stop there, but I see a huge opportunity in recycling. So not only selling it, so go through the entire life cycle of a good. So producing a car is super cool, but what is next? So I think when we take sustainability serious, and that's why I'm saying it's a process, it's a journey. We need to basically understand the entire supply chain and entire then to the ultimate end. And as I said, I see a huge opportunity also in the recycling.
So, I mean, actually, that's almost adding in another layer to supply chains. I mean, we used to have value chains, you know, the whole Porter theory going right the way through from pulling raw materials out of the ground to taking them through to production, manufacturing, sales and distribution. And now you're actually saying, but we need to start thinking about a circular economy. We need to start thinking about how we take that right the way back to the beginning again. Now, there's an interesting question. How do you price a trade finance cycle that has recycling in it?
I would say the first thing which will come is that recycling becomes a super interesting business opportunities to finance. So far, recycling was usually state support, subsidized certain schemes. It now, and as we said earlier, it's a super fertile ground at the moment, becomes a business and a business model in its own right. And then from a trade finance perspective, also financing the latter end of the product life cycle becomes a huge opportunity for banks and for trade finance.
It's I think this is really interesting because when you think about where we are, the opportunity of the technologies of the future, the recycling technologies, the digital technologies that help nudge companies into becoming more sustainable, the way we use satellite systems and space to become more understanding of what's happening on the ground so that we can make informed decisions all the way around the world. It's kind of bringing everything back together again. But where we used to look over the last 30-40 years, we've looked at venture capital as a way of assessing all of that. Actually, this is trade finance that can drive that innovation process and drive that change because it's already working. So what's the size of the market? What's the size of the prize out there?
So look, I would say that the size of the market is enormous. It's trillions. So if you just go into recycling of copper, look again, super fertile ground, as we said earlier. Look at the current commodity prices. So recycling becomes much more attractive, and if you're in a low commodity cycle. So there is now the opportunity then to basically go into those investments. So you need to build up the infrastructure, and B, then you need to finance the underlying flow, and C, it is the end also more sustainable. So if you have those components in place, you're ready. So I would argue we are ready, and we are seeing more and more of those finance and opportunities. And that is, if you also look at some banks, despite the disruption and global trade volumes go down, they're doing okay. From a revenue, from a business perspective, because there is new opportunities, there's new ways and things of financing and deploy capital and liquidity out there, driven by those trends, and ESG, the mega trend, being behind it.
So I'm going to end, because this has been absolutely marvellous, but I'm going to end with one question. After the global financial crisis, the banks came out in a very difficult place, and the banking sector has reformed itself, and there have been a huge number of regulations and changes which they're all history. After this crisis, which is the pandemic, the banks have a huge opportunity, particularly through trade and particularly through sustainability, to come out actually having helped companies through the difficulties of the pandemic and to have helped companies actually become more sustainable. Is that true? Is that something that you see on the ground? Is that something that banks are really trying to enable at this stage?
Absolutely, yes, wholehearted, yes. And it's also important for banks, because if you do those type of financing, you give yourself and the people working for the organization a purpose. The one thing is you get paid you're happy, you're of workplace, but then you also have a purpose. And don't underestimate how important it is also for young talents, for the next generation, to attract them, to have a proper purpose. And companies without a purpose, which is also linked into the society, I would argue their business models are not as sustainable as companies who have a clear purpose, which is also aligned with the priorities of the society.
I absolutely agree. And I remember when I was doing my PhD, somebody taking me to the window of the Bosch factory in Stuttgart and showing me, in Feuerbach in Stuttgart, and showing me the hospital on the hill, which is the Robert Bosch Hospital, and saying, actually, Rebecca, well, that's what we're working for, because this company actually sends a large chunk of its profitability to that particular hospital. And I remember saying that must create an enormous governance advantage, because people are working for something. So now maybe the whole of industry has that opportunity. Daniel, one last question.
Sure.
In 12 months' time, when all of this has been implemented and we're very much along a sustainability agenda, because banks and business realize how quickly we have to react to all of this, what are we going to be talking about?
We're going to talk about in 12 months that we are short of talents, we're short of knowledgeable people to help us, because now what we're talking is that's what is coming. We need, as an industry, to have the resources trained, up and running, to basically run this super cycle. So I would argue we will see as a next phase a war and battle around talent who have all of those features we just earlier touched on, because that's I would argue, and don't take it literally, a very rare species, and we basically need to grow and basically educate them and bring them in, and if the trend really takes off, that is as I said, the rare species, but it's also super exciting if you work in that space, because that's a huge opportunity.
Fantastic, Daniel. Thank you so much for sharing with me the last word in sustainability. Thank you.
Thank you.